Igence AI is reshaping the way we manage our finances, from everyday saving strategies to complex investment decisions. By harnessing the power of AI, individuals and financial institutions can make more informed decisions, optimize financial outcomes, and enhance overall efficiency. This video delves into how AI is revolutionizing the world of saving and investing, providing insights into its mechanisms, benefits, and practical applications. AI has emerged as a transformative force in financial management, offering sophisticated tools and insights that were previously unavailable. At its core, AI enhances decision-making by leveraging predictive analytics, personalized financial planning, and automated investment management. These advancements allow individuals to optimize their saving strategies and make more strategic investment choices. The power of predictive analytics. Predictive analytics is one of the most significant contributions of AI to financial management. By analyzing historical data and current market conditions, AI systems can forecast future trends with remarkable accuracy. This capability is particularly valuable for investment decisions, where understanding market movements and anticipating changes can significantly impact financial outcomes. AI-powered predictive models analyze vast amounts of data from various sources, including stock prices, trading volumes, economic indicators, and news reports. By processing this information, AI can identify patterns and correlations that might not be immediately apparent to human analysts. For example, machine learning algorithms can detect subtle market signals or shifts in investor sentiment that could indicate future price movements. These predictive insights enable investors to make more informed decisions about when to buy or sell assets. By leveraging AI's forecasting capabilities, investors can better time their trades, optimize their portfolios, and potentially enhance their returns. Predictive analytics also helps in identifying emerging investment opportunities and mitigating risks by providing early warnings about potential market downturns or economic changes. Personalized financial planning. AI's ability to provide personalized financial planning is another significant advantage. Traditional financial planning often involves a one-size-fits-all approach, where financial advisors use general strategies that may not align with an individual's specific needs. AI, on the other hand, tailors recommendations based on a detailed analysis of an individual's financial situation, goals, and preferences. AI systems collect and analyze data about your income, expenses, financial goals, risk tolerance, and investment preferences. This information is used to create a customized financial plan that aligns with your unique circumstances. For instance, if your primary goal is to save for retirement, AI can recommend specific savings vehicles and investment strategies that match your long-term objectives. Personalized financial planning also involves dynamic adjustments based on changing circumstances. AI can monitor your financial situation and adjust recommendations as needed. For example, if you experience a significant change in income or expenses, AI can update your financial plan to reflect these changes and ensure that you remain on track to meet your goals. Automated investment management. Automated investment management, often referred to as robo-advising, is a key application of AI in finance. Robo-advisors use AI algorithms to manage investment portfolios on behalf of clients. These systems automate many aspects of investment management, including asset allocation, portfolio rebalancing, and risk management. AI-driven platforms assess an individual's financial goals, risk tolerance, and investment preferences to create a tailored investment strategy. They then use algorithms to allocate assets across various investment options, such as stocks, bonds, and real estate. This process is designed to maximize returns while minimizing risk, based on the investor's specific objectives. One of the notable features of AI in investment management is its ability to continuously monitor and adjust portfolios. Traditional investment management often involves periodic reviews and manual adjustments, but AI systems can make real-time changes based on market conditions. For example, if a particular asset class becomes overvalued or underperforming, AI can automatically rebalance the portfolio to maintain the desired asset allocation. Risk assessment and management. Effective risk management is crucial for successful investing, and AI plays a significant role in this area. AI systems assess the risk associated with various investments by analyzing historical data, market trends, and current conditions. This analysis helps in identifying potential risks and developing strategies to mitigate them, recommending the best savings vehicles and strategies to maximize returns. AI can analyze various options, such as high-yield savings accounts, certificates of deposit, or investment accounts, and suggest the most suitable choices based on your financial goals. For example, if you are saving for a short-term goal, AI might recommend a high-yield savings account with low risk and high liquidity. AI also helps in setting and tracking financial goals. By monitoring your progress towards savings targets, AI can provide reminders and suggestions to keep you on track. This level of automation and personalization makes it easier to manage your finances and achieve your savings objectives. The future of AI investment. Looking ahead, the future of AI investing holds exciting possibilities. As technology continues to advance, AI systems are likely to become even more sophisticated. Innovations in machine learning, data analysis, and natural language processing will enhance the accuracy and effectiveness of AI-driven investment strategies. One promising development is the potential for even more personalized financial planning. AI systems may become better at understanding individual investors' long-term goals and financial situations, leading to highly customized investment strategies. The integration of AI with emerging technologies, such as blockchain and big data analytics, could further revolutionize the investment landscape by improving transparency and efficiency. Getting started with AI investing. If you're interested in exploring AI investing, there are several steps to start. Begin by researching different AI-driven platforms to find one that aligns with your financial goals and investment preferences. Look for platforms that offer transparent information about their fees, investment strategies, and performance. Many AI investing platforms offer free trials or demo accounts, allowing you to test their features before committing. Consider your investment goals and risk tolerance, as AI systems rely on accurate information to provide personalized recommendations. Provide detailed and accurate information to ensure that the AI can create a strategy that meets your needs. Finally, stay engaged with your investments. While AI systems can manage and optimize your portfolio, it's important to understand the factors that may impact performance. Regularly review your portfolio and adjust as needed to stay aligned with your financial goals. Thank you for exploring the world of AI-powered financial management with AI Chronicles. If you found this guide insightful, don't forget to like and subscribe for more content on the latest advancements in finance and technology. Share your thoughts or questions in the comments below, and check out our other videos for more insights into the future of finance. Until next time, stay financially savvy, and see you in the next video.